and welcome. You tuned into News Now with me, Ankita Saxena, and we do have the review for TCS. Now, it has reported its Q1 numbers, and let's look at the numbers first. For TCS, the numbers have come out while we were expecting. Right. So before we get to the numbers, let's toss to the presser. The presser is underway. Let's cut into that first.
Start with the CEO address, and then we'll throw the floor open for questions. Kriti, the floor is yours.
Thank you, Kritika. Good evening, everyone. As you all know, Aarti has joined us as President and COO, and this will be her first media interaction with all of you. Prior to this role, she was a Group Chief Digital Officer at Tata Sons, and she was leading Group's digital technology and innovation agenda across diverse portfolios of industries in Tata Group. Aarti, welcome. So, coming to our performance, during our last press meet, we had spoken about delays in decision making and project starts with respect to discretionary investments. This trend has continued and intensified to some extent in this quarter, and global businesses were disrupted due to conflicts, economic uncertainty, and supply chain issues. In this backdrop, our quarterly revenue declined by 3.1% year on year and by 3.3% on a sequential basis. Our rupee revenue grew by 1.3% year on year to reach 63,437 crores. Our operating margin stands at 24.5%, representing an expansion of 30 basis points over Q4 of FY25. This translates to 15,514 crores of operating profit. Our net margin for the quarter has come in at 20.1%, translating to 12,760 crores. Consequently, our EPS reached 35.27 per share. Cash from operations was at 12,804 crores, representing a strong conversion at 100.3% of net profit. On a sequential basis, North America was flat at about 0.1% growth, while UK and Europe declined by minus 0.3 and minus 3.1% respectively. Amongst new growth markets, Asia Pacific remained flat, while Middle East, Africa and Latin America declined sequentially. India declined by 32.6% in this quarter. Among the verticals on a sequential basis, technology and services grew by 1.1% and manufacturing grew marginally by 0.2%. BFSI declined by 0.5%, consumer business declined by 2.2%, life sciences and healthcare declined by 1.2%, communication and media declined by 3.1% and ERU declined by 0.6%. TCS banks and BFSI products and platform continued their growth momentum. The number of customers from whom we make more than 100 million declined by 1 to 62 customers on a year-on-year basis. However, we saw good addition of clients in the 10 million, 5 million and 1 million revenue bands. Our customer base of 1 million stands at 1,336, an increase of 26 over last year. We had a strong order book closure again this year. Our order book for the quarter stands at $9.4 billion, up by 13.2% on a year-on-year basis. North America TCV came in at 4.4 billion, BFSI at 2.5 billion and consumer business at 1.6 billion. Most geographies and business groups had strong order book closures. By the end of Q1, our net employee count stood at 613,069, a net increase of 5,090 associates since Q4 of FY25. Our IT services attrition stood at 13.8%. In this quarter, we also saw new service lines delivering growth. Essentially, amongst our services, AI data, TCS Interactive and cybersecurity led the growth. On AI, clients are accelerating their focus to scaling AI across enterprise. We are increasing our investments across the AI ecosystem, including infrastructure, data platform solutions, AI agents and business applications. Our AI solutions such as TCS Wisdom Next and Sovereign Cloud are seeing good traction across industries and markets. We are also scaling AI expertise across the company. Our 114,000 associates with higher order AI skills as of this quarter represent one of the highest number in the industry. In Q1, we applied for 171 patents and were granted 119 patents. The board has recommended an interim dividend of rupees 11 per share. Also, this will be Milind's last quarterly press conference. He has been a distinguished colleague and had a stellar record of service over 38 years in the industry, integral part of our management team all these years. Joining TCS as a trainee in 1987, he rose to lead the manufacturing business group and subsequently became the CHRO. On behalf of TCS, I would like to thank him for all his contribution. Thank you, Milind. As announced last quarter, Sudeep will be taking over from Milind. Where is Sudeep? Nobody can miss him. Okay. With that, I hand it over to Kritika. Thank you.
Thank you so much, Kriti. We'll start with Reema Tendulkar from CNBC TV 18. As always, we want to accommodate everybody, so 2 questions, and feel free to take your questions one by one.
Kriti, let's start with growth. Break up this quarter in terms of BSNL ramp down and how international markets did, and the outlook. Does growth come back in Q2, or the deals which were paused are still paused? And what about your guidance for the full year, which you stated last time, that growth will be better in FY26?
Okay. Reema, as we said, the sequential degrowth was -3.3. Out of that, -0.5 would be attributed to international, and remaining 2.8 would be attributed to BSNL winding down. From a outlook perspective, we are still confident and optimistic that international revenue in FY26 would be better than our FY25 revenue. Overall, it will be too early to call out when growth will resume, which to a great extent depends on more clarity emerging in the macroeconomic scenario. But I think with all the trade discussions coming to a close, the new bill that's been enacted in US gaining presidential sanction approval, I think things should become clearer maybe towards the end of July or early August. So,
Aarti, great to see you, and look forward to more conversations with you. New service lines have done well. Can you quantify the kind of growth and provide some color on the deal wins? And Samir, if you could just tell us a little bit about the margin, the breakup. What was the tailwind that you got on account of the BSNL ramp down? And Milind, explain to us the 5,000 headcount addition and the timing of the wage hike.
And the
wage hike, when you planned.
So Reema, from a new age service line perspective, when you look at AI, data, cybersecurity, interactive, some of the modernization services in terms of movement to cloud, application modernization, these service lines have grown well this quarter. And we see, especially on AI and data, strong demand from our customers. Customers are investing in industry-specific solutions. AI for modernization is coming across as a strong theme because Gen AI is now becoming the tool to really understand the legacy code and use Gen AI to convert and forward engineer to a modernized architecture and application. So these are all new opportunities. And when you look at enterprise solutions modernization with SaaS platforms, so significant demand there as well.
Can you quantify growth for us in new age service lines?
We don't call out service line specific numbers, Reema, but
deal win, I mean, we know the deal win number, 9.4, but the outlook going forward, how's the pipeline?
the pipeline across these services looks pretty strong.
Our Q1 margins were at 24.5%, sequentially improved by 30 basis points, and that's despite of building for capacity, or we invested into capacity and continued our other investments for long-term growth. And the tailwinds which you talked about mainly came in from reduction in the quality of revenue or reduction in third-party expenses and support from currency.
5,000 addition, which you see it in every quarter, so there's no difference here. It means we obviously started the quarter the way we started and realized that there are some business challenges towards later in the quarter. So this, yes, the number is here, and we'll obviously leverage some of these resources for future quarters. Obviously, with respect to wage hikes, we have not made any decisions so far on wage hikes, and we'll let you know as soon as we do that.
Thank you. Next question from Sajid Mangat from TV Profit.
Hi, Kriti. In your statement, you mentioned about demand contraction. Can you give us a sense of what exactly you're seeing at this point in time? Because in Q4, you said that it's a wait and watch for you, and now the commentary is much more, in the sense it's more bearish in nature when you're talking about demand contraction there. Because when you spell it out, your QOQ, CCC, constant currency numbers, you said only 0.5% decline was from international and 2.8% was because of BSNL. So just if you can elaborate more on what exactly you mean when you say there's a demand contraction which is there.
Yeah, see, as I said, international was minus 0.5, and there are 2-3 levers at play, like we discussed last time also, where clients have decided on a project, but where they think the ROI is not immediate. The same story with the discussion, but only the bar on ROI goes up. So you find more projects are getting paused or delayed. And in some places we find the decisions where we thought a transformation project, the decision would be taken in this quarter so that we can start the project. Those decisions get delayed where the ROI clients are not clear about the return on investment on those projects. So the overall framework on which the projects are getting delayed or paused are very similar. But again, as you would see, like we had a minor, very small growth of our small. It's a growth in North America, and UK and Europe had a degrowth.
How much of that is linked to what's happening in the US with respect to tariff negotiations and others? And because North America grew for you on a quarter-to-quarter basis, so how much of that is linked to that?
It will be very difficult to quantify, saying that X percentage of growth was impacted by tariff discussion. But if you look at industries, for instance, consumer industry is more impacted by tariff, manufacturing, auto industry is more impacted by tariff, but certain industries like banking are not directly impacted, but have a second order impact because consumer confidence is low. But it will be very difficult to quantify X percentage to a particular event or a situation.
Ati, hi. Can you give us a sense of the kind of AI deals which are coming in? Because $9.4 billion of total contract value in this quarter. How much of what percentage, if you can put to AI, and if you can also give us an indication of what is the kind of productivity gains that you are bringing into the clients? Because what we are hearing on the ground is that the gains are very limited to the extent of 10 to 15%. Are you able to bring in more productivity gains when you are engaging with your clients with respect to new orders?
Sure, Sajid. When you look at AI, I think first the nature of opportunities, right? So customers are looking at building industry-specific solutions with AI, domain solutions. So that's an area of opportunity where we are seeing increased demand. And the second area I would say is modernization, which I briefly talked about earlier. And how do you leverage Gen AI to really modernize your legacy applications? I think there's again strong demand there. The third area is customers are looking at, now that they see the ROI from the AI projects as they move from pilot to really delivering value. Customers are looking at how do we scale AI within their enterprise. So they're looking at how do I set up an AI office, setting up AI centers of excellence jointly with us. How do they create AI platforms so that their AI initiatives can scale across their value chains and functions. So those are the areas where we see the demand coming in. And in terms of, when you look at where AI is being applied from a service delivery perspective, right? So these are the bespoke new builds that you do, new application development. And then when you look at, application operations, right? Or infrastructure operations, that's where the productivity gains are starting to show. And also, all of us are hearing so much about coding assistance for development. So the savings are, the productivity gains are there for the coding. But when you look at a software being built, there is much more end-to-end, right from conceptualization all the way to testing and delivery. So, but the coding part of the value chain, we are seeing productivity gains.
Samir, 30 bips jump in margin for you. Your SG&A expenses came down by 2% on a quarter-to-quarter basis, if I'm not wrong. 9,300 crores, right? Means it is showing it's fallen there. And your other income has gone up by nearly 600 crores. So if you take these off, then you have a flat net profit which is coming on the bottom line. So can you give us an indication of why SG&A expenses, I mean, where do you get that gains from SG&A expenses and the addition in other income?
Okay, so on the SG&A expenses, there is nothing one-off to call off. We'll continue to drive productivity. Overall, if you see sequentially, it has been flattish too, as you have been calling it out with the gain. As a percentage of revenue, it has been flattish, nothing, and we will be focused on driving efficiency across our various line items. On the other income, the 600 crores which you called out as a one-time, we have received some interest on income tax refunds that is accounted out there.
Milind, 6,000 net employees, if I'm not wrong, but your attrition is at 13.8, which is a 2-year high. Are you seeing attrition inching up again?
I think definitely it is a little more than our comfort level. We are 11 to 13% is our comfort range. It is a little more than that. We continue to make efforts to bring it down, through continuous employee engagement, doing all the right things which we normally do with our people. We continue to do that and bring it down is what our aspiration is always, and that is what we continue to do.
And the gross target remains the same, 40,000?
So I think we are on target as of now. Depending on the business situation, we'll decide and calibrate how we take it forward.
Thank you. Anurag Joshi from ET Now.
Hi, Kriti. So the share of BFSI in your revenues, there's been a slight increase, whereas like if you look at some of the other industries, they've been steady. Do you expect discretionary spending also from BFSI sector to rise?
See, the share of BFSI increasing is more technical because BSNL going down has an impact on, that's a significant chunk. So that going down increases the share of BFSI. I don't want you to read anything immediately out of that. But from a discretionary spend, I think it is applicable. At this time in this quarter, we see it's almost secular across all verticals. Once there is a greater clarity, I think discretionary spend should come. Like our underlying belief has always been that there is a lot of pent-up demand. And clients like Aarti talked a lot about the opportunities that come through GenAI. Clients want to do a lot of work, but being held back because of the lack of clarity that's in the market. So once there is a better certainty, you would see discretionary spend coming back.
Yeah, and not going into specifics, but how would you characterize, the momentum of the order pipeline right now? Right now, like if we see the TCV, that's like, almost reaching $10 billion. So it's a very optimistic kind of a pipeline you see, at least in this financial year.
We are comfortable with this number. Okay, we previously also called out that 7 to 9 billion is a comfortable number. So, but as long as this, it's a good number, as long as there are no scope reductions, existing projects or pauses don't happen, like then it reduces the immediate quarter revenue. But overall, we are comfortable, and the pipelines continues to be strong for the coming quarters also. So, and in fact across all geographies, which gives us the confidence that the order book and then sooner than later the revenue should follow through strongly.
And the wind down of the BSNL contract, again the impact on your revenues, you are confident of overcoming that, and are there, going ahead, what are the factors that can offset this?
See, we try to offset the wind down. Both, as I said, like, we are confident that our international revenue will be better than last year. We are also looking at, BSNL itself is giving us a new set of offering that we can take to the market. That's because new capability we have that we also would like to take that to the market. And we have diversified further in many other emerging geographies than before. So collectively it should help us bridge the gap, if not completely offset.
My question to Milind, over 100,000, I think it's over like almost 112,000 of your employees, like they have capability of AI. As a human resource strategy, is that something, TCS is looking to instill and, make this broad-based across the organization? What are the plans over there?
Absolutely. Absolutely. As you've been saying, from the last so many quarters, we have been sharing with you in terms of how we are building AI competency across the organization. Now we are telling you how we are basically, taking it, building a pyramid around that, and that building higher order competencies will continue to improve quarter after quarter, and that is the path.
Thank you, Kriti.
Thank you.
Thank you, Milind.
Ekta Suri from Z Business.
गुड इवनिंग मेरा पहला सवाल कृति आपसे होने वाला है. आपने अभी इंसिस्ट किया कि इस FY में आप ग्रोथ स्ट्रॉन्ग देख रहे हैं, लेकिन अगर हम बहुत से वर्टिकल्स की बात करें तो इस समय हमें नंबर्स नेगेटिव में दिख रहे हैं. अगर जोग्राफिकल एरियाज़ की बात करें तो वहाँ से भी हमें नेगेटिव में नंबर्स दिख रहे हैं. तो आपको ये जो ग्रोथ का कॉन्फिडेंस दिख रहा है, ये किन वजहों से आप कहाँ से दिख रहा है और किन वजहों में आपको दिख रहा है?
So as I said, Ekta, I am confident of the international revenue in FY26 to be better than FY25. It's based on the order book we see, customer conversations we have, and there's the interest that we see in multiple service lines. Customers are interested in data modernization, application modernization. There is a ERP transformation that many of the customers